Sue, I mean, Sue, is this the bank's way of managing market expectations or lowering market expectations ahead of perhaps another bad quarter?
It definitely appears that way. As you know, all bank executives try to underpromise and overdeliver, but it's very different in Goldman's case because they're famously reticent about giving any kind of pre-earnings guidance or signaling results to analysts. And now it appears they're breaking their own rules, deliberately dropping clues about what one analyst says is likely the worst quarter since David Solomon became the CEO. Now, Wells Fargo's Mike Mayo says, quote, there's probably half a dozen items that fall into the weak, bad, or ugly category. Analysts have slashed their estimates as a result for quarterly profit by almost half since mid-June, and that's the biggest revision before an earnings report under Solomon's reign. Now, there is a view that this abundance of pre-earnings info may relieve pressure on the stock when Goldman posts results on July 19th. As David said, it wants to avoid a third straight quarter of earnings day blues for its stock. Goldman stock dropped 6% on its earnings day back in January, underperformed rivals again in April, and those are awkward moments for a firm trying to make the case that its strategic missteps are behind it.
So, Sue, I mean, everything from banking, trading, I mean, what exactly are we looking at in this earnings report, and what are investors really going to be keying in on?
Well, big slowdown in investment banking, that's perhaps to be expected, but when you line it up against other banks, it may well be the worst. Down over the past 6 weeks, Goldman has signaled that its investment deals are down about 25% in trading revenue, highlighting remarks in its real estate book, and it also said it's going to take a hefty write-down to sell that Green Sky lending platform. That's one of the final vestiges of that mistaken foray into consumer banking. Now, analysts expect net income of $1.4 billion in the second quarter. That's down by more than half from a year earlier, and it certainly compares disfavorably with other banks. Analysts expect a 19% decline at Morgan Stanley and jumps in revenue at Bank of America and JP Morgan. There's also been a lot of talk about the internal bickering and squabbling at Goldman, a lot of scrutiny and focus on the CEO, David Solomon. It has been one of the poorer performers in the bank industry, so it looks like Goldman wants to get all of that out of the way. Yes, it's going to be another disappointing quarter, and ironically, or perhaps deliberately, the stock was up in the latest trading session, riding on the back of that CPI data. So it appears the strategy may be working for now.